Good morning, good morning, good morning. My name is Jason Allen. I am a realtor and a real estate planner in Palm Springs, California, and it is time for your Monday market moment. It is June 19th, 2023. That's Juneteenth. Hope you're out celebrating today on this new national holiday. I am going to switch over to sharing my screen as I like to do. And we're going to be diving into Cathedral City today. Cathedral City is a city just to the southeast of Palm Springs. It's the next city over. And as I like to do, I'm going to start with single family homes. Excuse me. So here's where we are. Median sales price, $499,500. That is the middle house sold, not the average. Half of the homes sold above that. Half of the homes sold below that. We had a total of 28 units sold, and that is down a tick from a year ago. We always compare current year to the year prior, and down a little bit, not down a lot. The median sales price is down by 20%. So we are seeing the market softening a bit. However, our inventory just dropped. So we had some absorption, and this number is versus May of 22. Days on market, 58 days. So we're certainly on the market longer, but we're not seeing the sales price getting knocked off considerably. In fact, it's down slightly. And this is even compared to a year ago. So this, in this particular box where I'm circling, it means that most sellers got almost their asking price. When we skip down and look at above, you can see why on an average that's happening. Almost half of the buyers paid more than what was the asking price. So you see why this is buoyed. And this, in fact, these folks took at least one price reduction, but it's this number over here that's forcing these higher. And part of that is because we only have 2.5 months of inventory. So although the median sales price per square foot is down, it's not falling off a cliff. I'm going to use a different chart in just a few minutes, and you'll see what I'm talking about. Sold within 30 days, almost 45%. So 43% of the homes went on the market, and within 30 days, they were sold. 61% sold within 60 days. So this 61 includes that 43. And then over here at 82, that includes these other two numbers as well. Let me jump over to condos. And just so you know, sometimes I go through this a little bit more quickly, knowing that you can pause the video and review the numbers yourself. Median sales price, $327 on condos. It's down 11% from last year. Total sales, 16. So we didn't have a lot of sales. And our inventory is still very low, although it is more than where it was a year ago. 23 condos in all of Cathedral City is not a lot of homes for people to buy. Days on market, 49 days, so roughly 2 months. And that includes the typical 30-day escrow period. So you're looking at roughly a month of marketing and then a month of it being in contract and then closing. Sales to list price, pretty high. Sales to original list price, also pretty high. And then we go down here above. So 43, almost 44% of the homes are going above the asking price. Just like with single family homes, that's what's pushing these numbers higher. Month supply, about 3. Median sales price is down a little from a year ago. Now let me jump over to this chart. So here we are with houses. This is an indicator that we're in there's a seller's market going on. But here's what's really important. If you come down here and you say, all right, look at this chart. In June of 2018, 160,000, 170,000 was your 7-day average. All right, this chart has done nothing but gone up. There's a little bit of a rebound here, but anyone that expects this to come back to this is not being realistic in this market. Just not going to happen in Cathedral City or any of our cities, in fact. And then if you come down here and you look at these, this chart breaks it down by price point. Median again in the middle, half sold above, half sold below. You can see where bigger units command more money. Kind of obvious. I'm not doing the math here, but I wouldn't be surprised if these smaller units on a price per square foot is what's over here and impacting this. So I just want you to kind of have that in mind. There are a lot of things at play here. I'm going to switch over to condos, and you can see we're at a slight seller's advantage still. I beg your pardon. I was in condos. Let me go over to houses. We're in a strong seller's market with houses. So again, this goes back to demand is high as people get maybe pushed out of prices in Palm Springs or Rancho Mirage. Naturally, you look for a trade-off, maybe a little bit further drive from downtown. So you go to a lesser expensive area. That's pushing this up. And again, if you look at 2018, you know, the 7-day average was 340,000. We're over here now in 2023, and the 7-day average is 597, almost 600,000. To expect this to go back to this is unrealistic. So if you're in the marketplace right now, you can see where our 7-day average is lower than this high water mark. Are you going to wait on the expectation that this is going to fall a little bit? Where's it going to go? Maybe about here, you know, so 550, if you think that's where it's going to go, and you're over here at 600, that $50,000 difference may be impactful to you. But I can guarantee you that as interest rates come down, this number is going to go up. So what you want to do is take that $50,000 delta, if that's, say, your magic, and say to your loan officer, how much more does $50,000 in mortgage cost me a month? Is it 25 bucks? Is it $100? Is it $500? I don't know. It depends on what rate you are being quoted and how much you're putting down. But the point is that an actual price for the property may have less impact than the interest rate you're paying. And in fact, and this is a bad example because we're in a seller's market, a strong seller's market for Cathedral City, but let's say you focused on a market where it wasn't as strong and you focus on a house that maybe had some challenges, needs to be renovated, is in an area that's further from the downtown, maybe it's in a windy area, close to a commercial strip or busy street, you might go to the seller and say, Mr. Seller, Miss Seller, instead of taking a $20,000 price reduction, I'd like you to buy my interest rate down from 7% to 5%. And in doing so, you pick up a significant monthly reduction. Look, we all buy houses we buy big purchases based on what we can afford in a month, not necessarily the whole number. If I can finance an $80,000 car and make payments, I might go for the $85,000 car with the heated seats and the sunroof, yada, 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 because my payment only goes up 25 bucks a month. So you see where actual price of the property isn't necessarily as crucial as what the interest rate is. These are food for thought. These are things that I want you to be thinking about as you consider a purchase. Now, naturally, if you don't need to buy a house in a second home market like ours right now, then wait. If you don't have to buy a house anywhere, wait. But if you are thinking about buying a house, I encourage you to speak to your agent and be strategic about it. The fact that homes aren't selling as rapidly now has everything to do with interest rates. The economy is so strong. People have jobs. They just haven't gotten their head around paying 6 and 7% interest rate. So that's where I'll leave it for today. You are always welcome to talk to me about your real estate needs. I have contacts throughout the country, and I have contacts in some other countries too. Keller Williams International is a big company. That's it. You have my number, 760-0325-1900. Enjoy your holiday, and I will see you next week.